And just letting a couple people in quickly, but welcome everybody. I'm Melissa Everett with Sustainable Hudson Valley, and we will be getting started in just a moment. Okay, good noon. We have a treat for you today, which is a webinar that will not be dominated by PowerPoint, but instead will be dominated by human interaction and problem solving, which is kind of cool. I'm Melissa Everett. I'm Executive Director of Sustainable Hudson Valley, and our mission is to speed up, scale up, jazz up, and leverage progress against climate change. So we've done everything from solar and EV marketplace campaigns to regional planning efforts. But our sweet spot is really helping the people who are most motivated to get over the hump and change their practices and be agents of change in their communities. So today's session, Clean Energy and Environmental and Social Governance practices, it's about tax benefits for your businesses, nonprofits, and even public agencies. And we are delighted to have three really strong experts and two brave and creative entrepreneurs to present themselves as case studies with their businesses. We're gonna go through brief introductions of the resource experts, and then we're gonna do in sequence 2 case study dives, and then have time for Q&A. And finally invite, if you've got a building, if you've got a question, bring your issue forward. So Perry Goldshine, JD, is an advisor with Equitable, financial advisor, who's devoted to helping professionals and entrepreneurs achieve their financial goals. He's also a member of Sustainable Hudson Valley's board, and I can say he brings a signature, steady and well-informed presence to our work. Philippe Hartley is the founder and CEO of CleanFi, which is a platform designed to lower the soft costs associated with those commercial building improvements that advance resiliency, environmental health, resource efficiency, and resource independence. And Kevin Sullivan is the Director of Real Estate and Construction Tax Incentives at Brain Consulting. And his sweet spot is helping CPAs and their clients to take full advantage of federal and state tax incentives, credits, and the like. And he is a licensed professional engineer in over 30 states. Providing grist, we have Lizzie Van, the owner of the Bearsville Center, the theaters and restaurant complex in Woodstock, and Jennifer O'Donnell, owner of Stone Dock Golf Course in High Falls. And I just want to fess up that we're having a couple of access issues. And so there are a couple of those people who are not in yet, but I'm going to be working it. And I'm going to start by inviting Perry, Philippe, and hopefully Kevin to introduce themselves.
Right. Thank
Yes.
you, Melissa. Are you able to hear me? Yep. Okay. So, yeah, so on my end, apologies ahead of time. Those access issues are certainly affecting me this morning. Don't know why. But as Melissa mentioned, I've worked with her for quite a while on the Sustainable Hudson Valley board. I've been a number of things in my career, but both business and sustainability have been themes that I've carried through that. And in recent years, I've started working from management consultant to financial consultant, with entrepreneurs and HR executives, helping them with things like exit, transition, and key person strategies, employer retirement plans, and other ways to help support their employee teams and families, and strengthen the value of their companies. And with all of those areas, I offer the option to integrate sustainability into those efforts, something that's become increasingly important over time as many experts realize, politicians, NGOs, that we do need a substantial amount of funding to help support transitions to address climate change and other challenges. Some of the key areas of value that I've had recently are complementary business valuations, and also the theme of the webinar this morning, tax credits for initiating new employer retirement plans like 401ks, simple IRAs, and others. And I guess there was we wanted to talk about a specific benefit in the work that we do for a client. One of the clients that I work with is a growing management consulting boutique in New York City with a focus on corporate sustainability. They work with some of the largest companies in the world, along with a number of other clients, and have for many years. And they're growing rapidly with the interest in the business world and sustainability in recent years. And they had a number of needs, but I created a tax advantage business asset for them that helps them with investments based on the UN Sustainable Development Goals. So that fits in with the work they do, what's important to them and their employee team. It also supports executive benefits and employee ownership. And finally, it helps the business survive if something should happen to one of the partners or other key people. And so that's a high-level overview on me.
Philippe, do you want to pick it up?
Yes, good morning, all. Good morning, friends. My name is Philippe Hartley, and let's see, I'll make this intro short. Basically, there are multiple ways to gather a bunch of money to do a building improvement project. Some of it comes from the government. Some of it might come from your pockets. Some of it might come from local rebates and grants. And some of it might come from third-party lenders. I'm really in the third-party lenders' pocket of this pile. We call this whole process of gathering money capital stacking. That allows you to do the project you want. And when you need outside funders to add to all of these different resources to actually get your project done, it's sometimes difficult to accomplish two things. One is to find financing that will work with all of those rebates and grants in terms of timing and in terms of liens and in terms of ability to blend the two types of financing. But in addition to that, it's sometimes difficult when you're making an improvement to find the right type of funding based on your profile of property and your profile of balance sheet and corporate type. So we resolve all of those issues for you. We try to automate it through a platform called cleanfi.com, which is what we run. My colleague, Kristen Allen-Jones, is on the call as well. And so together we help property owners resolve all these different sources of capital so that they fit together well and so that they end up with their project done and so that they can cash flow it. I'm really looking forward to this morning because Melissa set up a couple of really interesting case studies. And so we're going to have a good time going over how we would get those done. And take it away, Kevin.
Okay, I think we're going to have to find and talk Kevin in while looking smooth and polished. However, what I want to do is call on my oldest friend, Jennifer O'Donnell, who has been urban planner, restoration architect, all kind of things. And then she and her husband bought a golf course. And it is a sprawling old golf course. I've been there. We've done beautiful events. I've planted trees on her stream bank. But these are adventurous people. And so they're doing would it be fair to say, a bootstrappy thing with this golf course? And I just want to ask you, Jennifer, to share the saga, the vision, the nature of the buildings, what you've already experimented with, and see if Philippe especially can be your energy doctor here.
Okay, I'm gonna go outside so in case it gets noisy in here. Hello, yeah, I'm very happy to be asked to join today. You can see maybe see my course behind me, but no, it's too bright. I'm gonna sit outside. I came to this golf course with no knowledge of golf and a great knowledge of environmental planning. And we own about 50 acres plus another easement of 18 acres. And it has almost a mile of stream bank, not stream bank, but the Esopus Creek. So we've been working on all levels, not only turning the building into a more welcoming space and trying to get it greener. We've already reduced our carbon footprint in the building by about 30%, but we still don't have solar panels or geothermal. And so what we want to do today in the case study is talk a little bit about the challenges we've faced in upgrading to renewables. And a lot of that has to do with the way the welcome wagon is set up, and a little bit how fractured it is. And I'm very happy to have you experts here today to help demonstrate how we can fix that.
Perry, you want to take a first crack at it?
Do you want to know more about it? Or I thought we had Bearsville Theater was going to go first.
No,
Yes, we thought so too. Everybody seems to be having more complicated days than.
Okay, so
That's okay, Melissa.
I'm happy to give you a little more information about the project.
Yeah, do.
Okay, so we've weatherized everything we could weatherize. We've done Energy Star on all of our equipment, new and old. If we've bought used, it always is Energy Star, and that's how we reduced our carbon footprint. We've explored the potential of doing geothermal, either on our building or even as a network with the neighborhood, and found that to be prohibitive. But even though we're sitting over the most perfect aquifer. So because we have solar south, you can see the building is completely free of trees, even though the rest of the course is like surrounded by forest. But we have a really nice rooftop where we can do solar. So I wanted to do solar. We need about 20 kilowatt array, which is about 55 panels, commercial panels. And we want to also spray foam insulate the underside of the roof and soffits at the same time so that the building is more airtight up there and a higher R value. And we want to do air source heat pumps. We switched from doing mini splits because we already have extensive ducting in the attic, and so it makes more sense to do that. The whole project comes to about 125,000. And when I contacted a number of people at different agencies, they all sent me in opposite directions. And I was finding that the financing would still be market rate, and that no one was really, except maybe the participation loan from NYSERDA, which was also a little bit challenging to get my arms around. No one could explain to me how I can bundle all three projects into one loan, so I don't have to go for 3 loans and financing through 3 different contractors who will work with me to do the solar, the insulation, and the heat pumps. So there's the problem case study.
Okay, well, Thank you for that, Jennifer. I think Perry and I will try to decorticate this opportunity here and see if we can come up with some solutions for you. Just before I get started on my side, I gather we still don't have Kevin on, right? Because I don't want to ignore him as part of this.
No, we do not, and I don't know, everybody has been registered and
Okay, no problem.
morning must just be blowing up.
We'll move forward. Okay, so Jennifer, first of all, very exciting project. We certainly know all about your challenges. Perry, I'm going to invite you to pop in at any time in the course of this. I don't want to monopolize this, but I'm just going to let my little spiel out, and then you pipe in if you will. So the first question that one asks is, what type of corporate entity are you, Melissa? Are you a nonprofit?
We're an S Corp.
You're an S Corp. Okay. I think you might have answered that. I apologize if I missed it.
No.
So if you're an S Corp, that means that you don't get the benefit of the funding that comes that is created specifically for nonprofits and underserved communities, as it were. You're for profit, you're for business. So you have the challenge in the situation that you're in of having to show that you're operating well as a business and that you're going to operate even better if you make all of the improvements that you are making. It's a little bit of a conundrum for a lot of businesses that are feeling that if only they could normalize or fix their operating costs by doing things like the kinds of improvements that you're talking about, they could get into a profit mode, because you actually have to be profitable before you make the improvements. Now, the way you will try to put yourself in a position, if you're not in that situation yet, where you are able to draw on some funds, is to leverage all of these resources that are out there, that exist, to be able to get some funding to do your improvements. Now, it doesn't mean if you're for profit that you don't have a lot of opportunities out there. The first thing that I would look at, obviously, is the kind of low-hanging fruit of the tax code right now and all of the things you're doing, which are the investment tax credits. I'm sure you've been told about those, right? So that is immediately applicable to both the solar aspects of what you're doing and even the geothermal heat pump that you were talking about benefits from tremendous investment tax credits as well. I see my colleague Kevin just joined us, so he'll have lots to say about that.
Yeah, you
Okay.
just let Kevin self-introduce and have it back, or keep going. You guys are old friends, so you.
Yeah.
Can you guys hear me?
Yeah, we can hear you.
Okay. Yeah, I don't know. I came in earlier and it wouldn't.
Okay. I tell you what, Kevin.
I'm having to tap this button every time I want to talk. I don't know why it's doing that.
Okay, let me
keep going, Philippe.
Let me just give 2 more minutes on this, Kevin, and you'll catch up contextually. We're talking about a golf course, for-profit golf course, going through weatherization improvements, found geothermal prohibitive, and doing a 20 kW array, solar array. So another thing, Jennifer, that you may want to look at is something called a REAP grant. Have you looked at REAP grants? Do you know about REAP grants?
How do you spell that?
Okay, so REAP grant is a Department of Agriculture grant that may or may not apply to you. It's an acronym. It's REAP, like the Grim Reaper, REAP grant. And I'm very happy to send you information about it right after this call. There is some section of New York that is in it, some that is not. I believe I can share my screen. I'm going to do that right now for everybody. There it is. So this is the section of Sorry, stay with me. This is a section of New York in green that is eligible for a REAP grant. I'm going to try to do this very slowly so you guys can actually get this. And there we are. So you can see in the dark green areas is a REAP grant. You put an address in there. I just put in Woodstock, New York, and it said the address located in the eligible area. The reason this is really important is that a REAP grant is a ton of money for a project. And both geothermal and solar are eligible for it. They'll give you up to 50%, that's 50 of the cost of the project, notwithstanding the fact that you also have full access to all of your tax benefits. And that means that you can cover up to 80 or sometimes 90% of your project costs thanks to Uncle Sam. So I definitely look into REAP grants. And I'll say this one more thing and then leave it to Kevin and Perry to fill in the background. The big problem with all of these projects, project improvement funds, is their timing. They come after the project is done. So how financing comes in is by providing short-term capital that will finance the entire project with an opportunity to repay that finance capital and finance only the remaining amount over long term. So that's the way you would manage that process. Kevin, take it away.
Yeah, and so the investment tax credits, same thing. You've got to finish the project, document what's needed to make a claim, and then ultimately file for the tax credits that are available, and either on a tax return for a taxpayer or for a non-taxpayer through a form that gets sent into the IRS, and then you wait on a check to be sent. So you either realize the savings once the project's complete and you file the tax return, where you claim the credits that you can use, or you claim the credits and then turn around and sell them. And then as a nonprofit or a government, you're having to complete the project, send in a form, and wait on a payment from the IRS.
Great. Can I say something? I got 3 bids from, well, actually 2 bids from solar companies. I'm waiting for a third. Also, what I didn't mention earlier before you came, Kevin, what I mentioned earlier was that we are insulating the under the roof and adding, changing out our older air conditioning unit, which has the usual ceiling registers that you can see, but the big heavy ones for air source heat pumps. We think that's probably the most effective way rather than mini splits, because then we have to close up the whole ceiling. But we're still weighing the options there. And we wanted to put all of them together under the same loan so that we're not forced to do 3 sets of financing. Now, would the REAP loan cover all 3 improvements?
No, the REAP grant is specifically for renewable energy and heat and geothermal. So it will not cover these kinds of improvements. But back to your earlier question, there are plenty of financing sources that will cover all of the improvements that you've talked about, and also allow you to repay the aid that you get from the U.S. government.
Okay.
In a timely fashion, assuming you qualify. I mean, these are regular credit-based, financing situations, so you have to apply, but there are certainly mechanisms that will allow you to cluster all of these improvements together.
Okay, so Stuart, I'll send you my email. I need to get that from Melissa. Well, turns out we are in an eligible area. And one of the things that does, I guess, puzzle me a little is that there's all sorts of people coming out of the woodwork to sell me solar. But only one of them mentioned USDA to me, and I have to give kudos to Jessica Barry of Lighthouse Solar, and is willing to work with me on that. And the other thing is that it's also puzzling that people will drop solar on your roof, but they won't tell you that it's really important that you lower your carbon footprint in the same time. So it seems like the incentives and the policy, being a policymaker in my former life, should really consider reducing your footprint as part of the project and offer incentives for doing that. I'm only going to get about $1,000 to $4,000 off of the insulation for doing a probably $20,000 insulation project. No other credits or anything, just a rebate. And it seems like a horrible waste not to consider that. My footprint will go down significantly before having to waste money, resources, PV, etc., on solar panels.
Remind me, Jennifer, you guys are set up as a nonprofit, is that right?
We're not a nonprofit, although we're setting up a learning center as soon as we can get a grant for it from the federal government, because we're working on a STEM program to work with school kids and to become a teaching space to deal with all of the things that we want to do regarding soil conservation, not to deal with it, but to teach it. Soil conservation, stream bank, all those other things. So we don't really have the nonprofit designation yet, and I'm not sure that it would be very challenging. I'll have to turn to Perry for that eventually. Who, by the way, full disclosure, Perry is my financial advisor. And at that point, we might be able to qualify. And if that's something that we could do beforehand, I would certainly do it.
Okay, so let's just recap for a second. We've got a small business, mom and pop, literally, and they are an S Corp, and they've bought this thing, and they're discovering grants and tax credits. And the concept, I just love to say capital stacking. It sounds like you know what you're talking about. But what else, is important for them to be thinking about in putting these pieces together of insulation, solar? I know there's a EV charger on the property waiting to get off.
Oh, we have the EV charger, yes, and the heat pumps.
You have air source?
We want to get air source heat pumps. We already have EV chargers.
Great. Okay. So I think Philippe and Kevin, just what else? Like, how do you go about making
Stacking.
Yeah, I mean,
What's on the
there's a tax credit for the EV charger.
I got 44,000 for that.
Yeah, and then there's for the HVAC and insulation, interior lighting work that you're doing, you can at least accelerate some depreciation tax deductions through a couple different means. One, through just segregating the work that you're doing into the proper recovery periods, but then also through an energy efficiency incentive under 179D of the tax code that allows you to accelerate the tax deductions up to $5 and something, $5.65 per square foot. So there's some things like that. The other thing I'd say is there may be local utility rebates for the upgrades that you're doing, or for purchasing certain equipment. Like in a lot of locations, you can get, some rebates for buying, heat pump water heaters, for instance. And so there may be those kind of opportunities as well.
Cool.
Yeah,
Okay,
you-
so oh, Perry, were you gonna say something?
Yeah, I was just going to ask if Jen was familiar with the community solar and whether High Falls was able to participate in that at all, where you're located, I guess, specifically.
Yes, I'm on the Marbletown Environmental Commission as of last month, and I've been working with Tom Conrad, who I met through a Sustainable Hudson Valley event. Thank you, Melissa. And I would join community solar, except that that's talking about potentially lowering my bills by about 10%. When I look at what I could do with solar on my roof, it's significantly more. It's cutting my costs in half. If I even at 10% interest, I'm looking at $600 a month bill instead of a $1,200 a month bill. So I'm really partial right now to stacking as much capital as I can into this project. I could do the community solar for a few months, but then once they get the solar on the roof, it would be over. So I would no longer be in that pool.
Okay.
Jennifer, I'll address your concern about why it is that you don't, just because it's an important question that wasn't answered when you brought it up. Why it is that the solar providers do not take a lowering carbon footprint approach to your problem. I'm a former operator of a solar company myself. I'm in the business I'm in now to solve problems I found as a solar operator. But I can tell you that in the construction and retrofit business, trades are extremely compartmentalized, and they are also driven by sales activity. Salespeople are not installers. Salespeople are commission based, and so their objective essentially is to sell as much solar as they can. So they don't have an incentive to lower your carbon footprint before they put solar on, because it does two things. One is not only does it lower their commission, but it also delays the whole process because they need to bring in other trades to do that work. Now, I do not mean to say that there are not responsible solar installers out there that properly work with other specialists and take a case approach to the process. They do exist, and you may want to prioritize that, not just yourself, but anyone else on the call, in the selection of the solar specialist that you work with, and actually ask for that. Can we first do, a blow door test? Can we do a windows test? Can we do, all of these things that will take your footprint down and require less solar? It's an excellent approach. I think, Perry, at the corporate level, you also have a larger view of how companies go about this, kind of taking a holistic approach, and maybe you have a couple of words on it.
Yeah, thanks, Philippe. And so, as we talk about these things and working with businesses over time, it's a lot of times smaller businesses where the founders or owners are bringing their values to their work. And so, as Jennifer has, they're looking at these things just as a matter of course, because this is something they believe is important to do. And then in working with other businesses over time, especially the larger they get, there may still be leadership in place that shares, values related to environmental conservation, preservation. But then that sometimes also becomes less of the driving force and becomes more of a dollars and cents thing. It's real mix in my experience. There are entrepreneurs that are very successful and they have the additional cash flow and profits to support the things they want to do. But I think probably more common in helping building owners as business owners is trying to determine, well, what are the objectives for these efforts? How much, is it cost savings, as Jennifer pointed out, between community solar and the installation over the long term for the panels? Certainly that's, a valuable benefit to see, that she'll incur substantial energy savings over time that will provide a return on her investment. I'm assuming in what sounds like a fairly rapid time period. And so when you're looking at those things, there are two sets of questions. One are the impacts, and then the others are the business benefits. Is this saving money? Is this making me more money in whatever ways? And that could include the marketing and public relations, or just the general goodwill with customers and partners in the business. Is it reducing risk? And with extreme weather, you could look at that assessment. I don't know how, having solar panels installed versus relying on a central power company would affect reliability, but just a theoretical example there. Those are some of the things that, I've helped clients with, and look at those things over time. And I think with, the energy efficiency and the renewable energy that we're discussing, there are a lot of ways to generate that value, as well as follow, your personal values in that process. You and Kevin are the experts on the tax advantages there. And it sounds like Jennifer is pretty on top of, the individual things that I'm familiar with, having worked in the policy field for a while. So I'll stop there, but that's kind of like
Actually,
a high
don't
level.
stop quite. Sorry, sorry to interrupt, but I have a follow-up question for you, Perry. And I want to just note, Lizzie, who we were expecting, was going to generously swoop in while in the middle of moving, so we all forgive her. But yeah, she's larger employer, and Jennifer is small but aspirational larger employer. And I think separate from the building, Perry had brought the idea that there are other tax benefits that you can develop from building up things you do, like an employee benefits program. So I wanted to not lose that piece.
Sure. And from that bigger picture perspective, just another, I guess, another reality that doesn't necessarily flow with the building and the taxes idea, but for building owners, for business owners generally, one of the recent tax benefits available came from the Secure Act 2.0, which is an Employer Retirement Plan Act. And it doesn't have to do directly with increasing environmental sustainability in the efforts. It's purely tax beneficial for smaller employers. It is something that will provide tax credits for both starting retirement plans like 401ks, simple IRAs, even SEP IRAs, all different types of retirement plans that smaller employers could employ. And those tax credits can, if the employer is profitable, they can actually pay, if not completely, a large part of the cost of starting those plans, and even contributing to employee retirement accounts, which helps attract and retain good people for their companies. And in that process, the sustainable angle is that the Department of Labor had clarified how companies could offer both environmental and social options in those plans not long ago. And so there are ways not only to start retirement plans to help attract and retain good people, but also to provide sustainable options for them in those plans. And because those plans represent in the aggregate a few dozen trillions of dollars in the economy, which are not being allocated toward environmental solutions right now, that could have a huge impact over time, as well as attract and retain good people. And so that's kind of like the high level overview of what I think Melissa was referring to. Again, not directly related to buildings and tax, but kind of fits that role for the building owner as an employer.
Yeah, small business. I mean, it all has to fit together. This question in the chat: what tax benefits exist to build a new government building, and who can you reach out to? And I'm guessing that is as a contractor or architect or something. And by the way, throw your questions in the chat, because we kind of pitch this as a nerd out. So don't let these guys get off easily. Who wants to do the government building thing? Kevin?
I can I can speak to some tax incentives that are there. So for a government building, a new building, there's a few things that you can do as a designer or builder of a government or a tax exempt building. You can actually get a tax deduction based on the energy efficiency. Again, under that same section of the tax code 179D, and that actually that benefit goes to the designer or builder, and so it's sort of an incentive to build energy efficient commercial buildings. And for example, if you build a call it 100 for the math for easy math purposes, if you build 100,000 square foot high school for an independent school district or something like that, or a government agency, you can get up to a $565,000 tax deduction as the designer or builder of that project. And the way it works is you've got to get a third party to certify the energy efficiency of the building, and you have to have the owner of the building allocate or assign that incentive to you, because they don't pay federal tax and they don't depreciate property or take tax deductions in that way. The law allows for that allocation of up to $5 a square foot, or right now it's $5.65 because of inflation. So that's a very lucrative incentive for architects, MEP engineers, general contractors, and so on that are working on government and tax exempt buildings.
Great. Philippe, anything more on that?
Yes, so I just added into the chat a link to something called direct pay, which is the federal government's incentive to local, regional and state government entities that obviously are non-paying entities. So this is something that is also applicable for nonprofits. It's their version of the investment tax credit, but obviously they don't get a credit because they don't pay taxes. So instead, the federal government just pays them directly. And that is subject to all of the same adders, meaning special circumstances that can actually add credits to the ITC or to direct pay. So, for example, whether you are in an energy community or whether you're in a low-income community, or whether all of your components are US made, those are all called adders. And that money also comes after the project is done. That money has to be filed for while the project is in progress. Details are in that link that I sent on how you do that. But it's free money. Basically, you just have to file for it and you get it.
Excellent. Well, so we have a bunch of people in this audience who have been working in this domain for a long time. And so I want to really welcome questions, from the people that your client, if you're an architect on the call, clients, or if you are an accountant and you have clients, what's on your mind?
I don't think we got your entire question. At least I didn't, Melissa, because you cut out.
Oh, yeah, sorry. If you are, I know there are some architects and engineers on this call. There are also at least a few people on local energy task forces who work with, a whole lot of folks in communities. So thinking about the people you serve, what else, let's get another round of questions going.
While we're waiting for some questions to roll in, I just wanted people to know the background that we started by getting a study from L&S Energy through the Green Jobs, Green New York resources, and it was completely free to my business, or maybe I paid $100. But they spent a day or so in the building, and then they ran a lot of ran a lot of numbers, and we got a very detailed report on payback for all the different measures that we could take. So I just wanted to encourage people who own buildings, whether they're businesses or residential, to take advantage of that program. I believe it's free for residential, because as I was saying earlier, the first step is to weatherize the building. And then you can really move into the more complex and expensive space. Some of the simplest things that we had to do were weather stripping doors and putting seals on the underneath the door. That very simple things. And I just want to encourage people not to jump right into the renewable space. No offense to anybody who sells those, but to start with the easier and less expensive measures that are literally the low-hanging fruit.
Yeah. And I would also say there's a NYSERDA funded entity, and they could not be on the call today, but they're going to listen to the recording, so they'll be happy I'm shouting out to them. They're called the Clean Energy Hub, and it's run out of Cornell Cooperative Extension, but they have an energy expert for every county. And they're going to be actually probably following up with you guys, Philippe and Kevin, because they're climbing this learning curve, but they are there to be a resource to residents and small businesses at the local level.
There's
One
another.
other thing, sorry, go ahead, Kevin.
I was gonna say there's another resource that's pretty useful, a website. I'll put it in the chat here. It's Desire USA, and you can actually go in there and type in your zip code, and it'll give you a list of all the federal, local, state, et cetera, incentives that are available to a multitude of projects, for personal residences to commercial construction, renovations, upgrades, et cetera. So that's a pretty good resource that can be used and is specific to locations.
Great. Anybody else on the call who owns a building and is thinking about this stuff in real time?
While you're considering a question you might want to ask, I wanted to just kind of get back as a gap filler here, Melissa, get back to Melissa's case. Because one of the things that really intrigues me about Melissa's situation is water. So you're moving a fair amount of water, obviously. I'm sorry, Jennifer. You're moving a fair amount of water. Water is an extremely expensive thing to deal with. 25%, for example, 25% of California's energy is used to deal with water in the entire state. So you're either changing its density or you are moving it from one place to another. And in your case, you're moving it. And moving it, requires a lot of force. It requires a tremendous amount of energy. So one of the things that I would look at if I were you is either your pumps, if you are using pumps, I don't know if you are or not, and your piping, basically making sure that you have really good flow, so that you're not using more energy to move all that water through your pumps to wherever you need it to get. So those are small things, but since you are a golf course, it's obviously really critical for you, and so therefore we sometimes think about building only, but in the outdoor environment that is controlled and managed, such as yours, you are going to have resources that are going to be used, obviously a fair amount, including, the vehicles that you use to mow your lawn and all that sort of stuff. You might want to think about all that. And there are incentives for all of those.
So that's a good, great question. Sorry, Melissa. Yes.
Oh, another question in the chat before too long. But go ahead, Jennifer, follow up.
So I just wanted to say, yes, we've investigated the the smart mowers. They're made by Husqvarna. It's I believe it's a Norwegian company, and we visited a golf course that has been experimenting with them, and we're going to move there pretty soon. They are run by electric, and they are right now most equipment for mowing is quite expensive and runs on diesel. So that they can actually, with a certain number of those, which would probably end up costing us close to 100,000 for the whole course, we could probably mow everything that is now mowed by diesel. So that's a very good point. The town, in fact, has decided to look at the same mowers that we right now cannot afford for their own facilities. So I'm glad that at least there was some benefit from my research. The other thing is that we do have a pump that brings water from the stream, which returns to the stream. We do water withdrawals on a regular basis whenever we have drought, but otherwise we don't. And we have thousands of feet of pipe infrastructure that we very carefully maintain. But we have a lot of natural water running through the course so that we don't have as many needs as you would assume we might as a golf course. But one of the reasons that we are very careful about what we put down on the course is because we're in a floodplain that sits on the Rondout Creek, which goes down to the Hudson, which many communities drink from. So we don't want to add too much nitrogen loading or any pesticides at all. We are moving completely off of pesticides. And at this point, only the greens have just a little bit when there is a situation that can't be addressed any other way. But we're talking about beakers, not gallons, which is, by the way, much more common in farms than it is at sustainable golf courses. But I just wanted to say,
I'm sorry, we're almost to the wrap on. There's a good question in historic preservation tax credits and historic buildings.
Well, I can tell you about that because I'm a historic preservationist. So if somebody wants to contact me on the side, you can get up to 40%, 20 through the state, 20 through federal, but you have to have the plans approved by the state historic preservation officer. And so if you want, I can walk you through that offline. But it's a very, very green thing to do to restore a historic building. So I commend you for asking the question.
I will send the chat. I will connect everybody.
I was going to say
Well,
that's a tax credits that's available in a lot of states, by the way, and it's usually managed by the state to the federal government.
Okay.
Right. You have to get your project approved. You have to get your project approved before you go and do it, though. So it's very important to check the SHPO website.
So big picture, we're talking small business, we're talking know your tax benefits and think holistically about all the ways you can do good and save on your taxes. Watching for that one more killer question that's gonna give these guys yet more opportunity to shine. But Philippe and Kevin and Perry, if you want to just maybe sum up or anything that you thought we would get, we did not.
Yeah, I'll just make a note, on a time check. So we're wrapping up, and I think, I don't have, I guess, much to add to the comment a little earlier about just looking at those things and knowing going into a project what it is that you most want to accomplish. Again, both on an impact side, but also on environmental impact, but also on that business side, and to look at those things closely. Obviously, and these guys are the bigger experts on the tax side for buildings. There is a lot of opportunity out there, and there might be salespeople approaching you, for the solar companies, as I think Kevin or Philippe mentioned. They'll be knowledgeable. Ask them those questions. Be proactive. As Jennifer, I know, has been doing, and I think that'll be a real benefit for the project overall. Though it sounds like Jennifer, you might be more ahead of a lot of other building owners, business owners looking at some of these things. So kudos to you for that.
Kevin?
Can I just, oh, sorry. I just wanted to say that when I started looking a few weeks ago at doing this, I found no place that organized the links and all the information that have been presented here today. So I'm very grateful for that. I think it would be a really nice thing for Sustainable Hudson Valley to put these things up on a page with some kind of a basic roadmap with the advisors that you have, because it is so difficult to navigate, even for someone like me who knows policy and can read all of this information. So I don't know how they're going to get to the kind of targets they have if they don't start making it easier for people to find these resources and understand how to use them.
Yeah, we will do our darndest. And I think, Philippe, can you screen share and show people CleanFi real quick? Because I think that is kind of an architecture.
Sure. Happy to, and I'll do it very, very briefly. And in the process of doing that, I will say that we did not talk about the Environmental Protection Agency's new release of $20 billion of funding for projects such as these. It is not yet released, but it has been distributed in terms of a network, if you would, of banks and organizations, community organizations throughout the United States that will put that money out. We're basically just very, very briefly, we are a platform where all of these different institutions put up their projects. And so you enter a property address right in here and you start your project, and they're literally a matter of 5 steps. You end up with different funding options. But remember, these are not grants. These are not tax credit. These are for-profit or non-profit institutions that are putting out money that you are going to need to pay back. But it works in the context of the fact that there are other types of funding that also are part of the capital stack. And so we do everything that we can to help you gather all these different kind of resources so that they work together. And I'll leave it at that. Thank you.
Thank you. Kevin, you want to just say a couple lines about how Brain works with professionals? Yeah,
I mean, a lot of what we do is about education and awareness, because, to your point, there is a lot of information out there and a lot of different resources. And so we work a lot in the built environment with designers and builders and owners. And, we do free assessments. So we look at what you're doing. We find the things that can help financially, and then execute on those so that you can ultimately claim those financial benefits.
Great. And Perry, anything more about your offerings and how we've got everybody's contact information here. We'll share that with the chat.
Mm-hmm.
I would like to just thank Melissa and her team for organizing this. It's been wonderful. And I want to thank all of the attendees and all of the folks that participated in this process. I found it very useful. Thanks to my colleagues, Perry and Kevin, for supporting this effort. And cheers, everybody.
Cheers.
Yeah, definitely. Thank you all. We'll do it again. We'll share the recording.
You
We
so
welcome
much.
feedback. And this is, however cobbled together, this is an invaluable brain trust.
Thank you.
Thank you so much.
I'll
Thank
be
you.
in touch.
Yep.